So I want to welcome everyone to today's meeting. Last week, I told us we started a series. We started the series last week on why life insurance is a benefit to the assured. And we were able to discuss some of the benefits. And I told us we'll be taking it one after the other. And last week we talked about the term assurance. Term assurance, I told us then last week that term assurance is one of the policies of life insurance, one of the products we have under life insurance policy. And we discussed about term insurance as being the cheapest, the easiest form of life insurance. So today, I want us to move, I will be moving on to the next one on my that I've scheduled for today, which is, okay, I'll be talking about whole life policy, whole life insurance policy. This policy actually is one of the, I would say one of the oldest form of life insurance policy. And just like I told us, when I was starting this program, I told us that in the years, that insurance was the concept of insurance was well intended, but the way it was presented was not that attractive. So today, I'll be talking about one of those, I'll call it one of the ancient policies, especially in the life insurance, that life insurance offices do offer the assured in those days. It is called whole life insurance. The insurance public could not comprehend the fact that, how come they just keep giving, they just keep paying premium, they never see when there will be claim. Because this whole life insurance is all about, it's just for the whole lifetime. So the insurance public could not reconcile the fact that how can we just be putting down money and we'll never see results. So it's not that they are not going to see results, but it's because, just like I told us, the concept of insurance was well intended, but there was incommunicado. The communication was not clear. So this evening, I'll be demystifying the mystery behind the whole life insurance policy. So we'll be talking about whole life insurance policy this evening. And just like I said, last week we talked about the type of whole life policies, which were okay. We talked about today we'll be talking about the types, I'm sorry for that. The types of whole life policies. So we'll be discussing non-profit whole life policy, with profit whole life policy, and low cost whole life policy. What I meant to say was that last week we talked about the types of life insurance policies for individuals, which were term assurance, whole life, and endowment. That was what we discussed last week. And we talked about term assurance that last week. So today we are talking about the second one that I made mention last, which is whole life policy. So under the whole life policy that I'll be discussing this evening, we have non-profit whole life policy, with profit whole life policies, and low cost whole life policy. So that is what I hope you can all see my screen. Can you see my screen? I want a response. Can you see my screen?
Yes, we can.
Okay, thank you very much. So I'll be starting with the non-profit whole life policy. This non-profit whole life policy is just that you pick up a life policy that there will be no profit to it. When you pay your premium, the life office they will not, that is not that that money is sitting idle. That premium is being used to, for investment purpose. But if you now choose that, okay, you don't want profit, you are saying that you are not ready to participate in the profits from the whole life, from the life office. So that is what non-profit whole life insurance policies mean. It means you are saying, oh no, I don't want profit. That is just death benefits that I want. Now it pays only the fixed, sum assured whenever death occurs. A fixed premium is paid throughout the policy duration. If I need to take water, I need to take water. Thank you. So I said non-profit whole life. It's based only the fixed sum assured whenever death occurs. A fixed premium is paid throughout the policy duration. The sum assured is usually being affected by the inflation due to the time value of money. And this is not an attractive policy to the insuring public. I will explain what I've just read out. So the non-profit whole life policy, once you sign up that, okay, I'm paying this X amount of money as my premium. Let's work with the example. Let's say by the time your premium was calculated, maybe you are like, okay, I want to pick up a whole life policy of, let's say, 20 million naira. Are you with me? Now, let's say you want to pick up a whole life policy of 20 million naira. Now, based on your age and whatever your premium will be calculated for you through actuarial valuation. Now, let's say the premium that was arrived at is maybe 10,000 naira. I'm citing an example, right? So once you start, and we call it whole life. Let's say you are age 30, and maybe you are now paying for the next 35 years. So it is this 10,000 naira you'll be paying once you start it. For 35 years, you'll be paying 10,000 naira. And your sum assured will not increase, will just be 20 million naira, for example. Now, imagine the value of 20 million naira today, and imagine what the value of 20 million will look like in 35 years from now. Now let's go back a little. In the 80s or 90s, if what 500,000 naira can do then is not what it can do now. I hope you can relate to what I'm saying. That is, for time value of money, inflation and a lot of things would have watered down the value of that money. So, but this whole life policy is not saying once you start with your, maybe the premium is 10,000 naira. Once you start with 10,000 naira, you continue with that 10,000 naira throughout the whole life, as in throughout the lifetime, that is for the period for which the policy throughout the policy duration. So it makes it non-attractive to people because, in fact, because of that lengthy period of time, people get bored. The insurance public gets bored. And along the line, they get it mixed up. They may not even remember again. It is paid once in a year. So it becomes so boring and unattractive. So this is what people don't really understand. That they'll say, we are just paying out premium. Nothing is coming out of it. It's because most people don't understand what they signed into. The context or the policy terms, or they not really understand what the policy is all about. And that is why this program has been set up, for us to be enlightened, for us to know exactly what we are going into. So, but these days, This type of whole life policy is not even, most life office don't even encourage insuring public. Know that if you as an individual or as an if you come up that, oh, you want this policy, it will be structured for you, but it's not what is being projected these days. But you know, for the purpose of this program, I'm giving us all this, and I want us to have all this understanding that these are some of the policies that were in vogue in those years that made life insurance unattractive. I hope we can all relate to that. So that's all about non-life whole, non-profit whole life policy. Let's move to the second one I have for us today, which is with profits. With profits whole life policy. Those of you watching me on the Facebook Live, I want to appreciate you, and I want to say good evening to you all. Now, with profits whole life policy, this policy pays out the sum assured when they are, with their accrued profits. With profits means that policy is participating in the life office profits. That is, when the premium that is being paid, when it is used in an investment, the proceeds of the investment is being given to the insured or to the assured. So that is what we mean by with profit whole life policy. How be this profit is a reversionary profit. How do I mean? It's not that you now say, oh, I want my profit. No, this profit is being gathered together and it's being paid out at the death of the assured. No, I told you it's a whole life policy. This policy pays out when the assured is no more. It is not a maturity policy. It's a death benefit policy. And when we say death benefit, it doesn't mean that once you pick out the policy, we are saying go and die. No. It is not about, we are talking about the benefit. Why life insurance is a benefit to the assured. And if you remember, last week I laid emphasis on it that yes, it's a benefit to both the assured and the beneficiary. That you as the assured, you have that peace of mind that in case you are no more, your beneficiaries they live on, they have something to fall back on. And the beneficiary too, they have a soft landing. I hope you can relate with that. So those are some of those benefits of life insurance. So when we say whole life policy, the whole life policies, they pay out at the death of the assured. So when we say with profit whole life means that policy is participating in the investment of the life office. What I mean by life office is the underwriters, the life insurance company that effected the policy for the assured. So that is what I mean. So the policy is taken up as a family protection plan. You as a breadwinner, when you pick up a whole life policy, you know that if at the end of the day, if you are no more, your family has something to fall back on. So, and it's not just the sum assured that will be paid, it will be sum assured with all those profits, all the bonuses that has been accrued to the policy. So that is it. The premium payment ceases at an age and as an agreed time. It's an whole life policy, but when you pay the policy up to certain age, as it would have been agreed upon, maybe age 60, 65, or 70. It depends on the terms and conditions of the policy. Once you pay the premium for a certain age and you are still living, you are still alive, you will not be paying premium again, but the policy will still be effective. It is an whole life policy that will pay out at the death of the assured. So even after age 65 or age 70, as the case may be, depending on the agreement you have with the life office, you cease to be paying premium, but the cover is still on. So anytime you are called beyond, you are called anytime you log out, as in you are no more, the policy will not speak. The beneficiary will not be paid the sum assured and with their bonuses or profits. That is why it's called with profit whole life policies. I believe we can all relate with that. Now, for the sake of our time, let's quickly move to the last one, which is low cost whole life policy. Now, these policies are with profit whole life, just like the other one I've just talked about, which is with profit. Low cost policy too is with profit whole life policy, and it has a guaranteed level of cover. The policies are written with two sum assured. How do I mean? The two sum assured says that the amount payable on death will either be the basic sum assured plus bonuses or the guaranteed death sum assured. How do I mean by that? Whichever is greater is what will be paid. Now let me break it down for us. The basic sum assured, let's say your sum assured is maybe, let me see work with the example that I said, maybe 20 million. Let's talk about 20 million. Maybe the basic sum assured is the 20 million naira. Now you pick it as, okay, the basic sum assured is 20 million naira. Now every year, because it's a with profit, it's with profit policy. So every year, the percentage of that sum assured is being given back, is being added as a bonus, depending on how the investment gives or would have been told from the content of the policy that, okay, maybe your bonus every year will be maybe 10% or 50%, depending on the terms of the policy. So it will be added. Then there is a guaranteed death sum assured. We call that death benefit. Maybe the death benefit of that policy is like maybe 30 million naira. Now, if death occur, if the basic sum assured, no, I said maybe the basic sum assured is 20 million, and every year bonuses are being added. So if death occurred, maybe when it's now calculated, the basic sum assured with the bonuses maybe it's now 25 million. But the guaranteed death sum assured, no, we said it's 30 million. So it is the 30 million that will be paid, because 30 million is greater than 20, maybe 20 or 25 million that would have been paid, that would have been the sum assured with bonuses. But if death occur, if at the time death occur, all the bonuses that have been added to the basic sum assured, maybe the basic sum assured with the bonuses has been up to like 40 million, and the guaranteed death benefit is 30 million. So it is that 40 million that will not be paid to the beneficiary. I hope we can all relate to that. So whichever is greater is what is given to the beneficiary at the time of death.
That was like
please, let's mute our mic.
So
that is the low cost whole life policy. So all these whole life policies, they are made, just like I told us, they are made for the purpose of, if the life is assured is no more, the family have a support. The family have what to fall back on. With this, I want to stop now and leave time for questions because of our time. Remember, this is 30 minutes interactive session with Grace. So, and our time is fast spent. So I want to welcome
your dad is on.
Thank you for listening. Thank you, everyone. Please ask your question. Unmute. and ask your question. Thank you for listening. I'm waiting for questions. If you are not clear, let's ask the question now. Just like I told us that this is a series, we are talking about life insurance, how it is a benefit to the assured. We laid the foundation last week. We said both the assured and the beneficiary, they have both benefits of life insurance policy. Unlike erroneous beliefs or erroneous concepts or erroneous beliefs that we have had in the time past. So that's why this program, 30-minute interactive session, Grace Ojo is out to enlighten us, bridge the knowledge gap in the insurance industry. I want to welcome questions. It's time for question. Please ask me question. Our time is fast spent. I don't want to be the only one talking. I want to attend to questions. For those of you watching me live, on Facebook, you can text your question. I will respond to it later. Yes, Mr. Peter Adibola, thank you, sir, for raising your hand. Can you unmute and ask your question, sir?
Good evening, madam.
Good evening,
And thank you very much for wonderful presentation. Good evening, all the participants. Okay, my question is this. Last week, you discussed about term assurance.
Yes, sir.
And today, we are talking about whole life
Insurance.
assurance. The first question is that I want to get it right. I've seen it, some people say is whole life assurance. Some people will say whole of life assurance. So which one is correct?
Your internet, you are not audible enough, sir. You said you want to get clarification between term assurance and whole life.
No, I said that I have heard people saying that this type of insurance we call whole life is whole life insurance. Some will say it's whole of life insurance. So which one is more correct out of the two terms? Then number two question is that when I was in the UK, I had a friend that had this type of policy, this whole of life policy. That's what they call it there. And he told me that from that policy, it is possible for somebody to borrow money from the policy, the amount that you have paid to the insurer. In Nigeria, is this still the same thing? Or you just pay your premium for life, you won't be able to borrow or take loan from the premium that you have deposited?
Okay. Thank you, sir. I appreciate for that question. Oh, well, maybe over there, maybe it is called whole of life, but the standard, what is called is whole life. Maybe why some people are calling it whole of life is because it is throughout lifetime. Just like I said, imagine maybe you are age 30 and you are paying premium for the next 35 years. I mean, it's throughout life. It's whole life. That is why it's called whole life. Whether it is whole of life, maybe that is what it was. It is called whole life policy. It's a whole life policy because of that length of time, because of the duration that is involved. Because it is expected that once you pick it, is throughout the lifetime, throughout the time you are, as long as you are living, and throughout the time that you will, even though you are still alive, if you get to a stage, you will stop paying premium, but the cover will still continue because you would have paid the premium for maybe like minimum of 30 or 30 years. And even if you are still alive, so you will stop paying premium, but the cover will still be on. So that is why it's called whole life. So if whether it is whole of life or whole life, is just semantics. I hope you understand. It's whole life policy. Then the second question. I'm sorry, I didn't get the second question. The second question is about.
Okay, the second question is that can I borrow from the premium that I've paid?
Okay. Yes. I understand now. Well, it's not a common practice in Nigeria that you want to borrow loan, because why it was abused in the yesteryears when life office used to borrow people money loan. It was abused. So most insurance companies, they do not factor loan borrowing, because when people borrow the loan, they will not pay it back. And if there's now occur and life office is now saying, oh, the policy has been breached, or there's no more cover because there was at the time the loan was borrowed and all that. So it becomes an issue. So the beneficiary will not understand that the assured maybe have not lived up to the terms of the policy. So the borrowing of loan has been discouraged in Nigeria. I believe I've been able to answer your question, sir.
Yes, thank you very much.
Okay, sir. Who else?
Good evening, madam.
Good evening,
Good evening,
sir.
madam.
Good evening,
Yes.
sir.
And good evening to everyone on the platform. My question actually stems from the second question asked by Mr. Peter Adebola.
Okay.
With regards to the policy. And to be direct with this, my question is this. Can it be honored as a form of collateral, being a financial instrument? I'm not even talking in the context of borrowing money within the insurance company now, but perhaps borrowing money from banks and other institutions. Meaning what? That in the event that the insured defaulted, perhaps the amount that should be given to the beneficiary will be forfeited. Can that be?
Yes. Well, just like I told us, that this is a series. There's still another form of policy that can be used as collateral. Just like I said, that just like the question that Mr. Peter asked, that can it be used as loan? In those days too, it was used as collateral, but because of this issue of default, so all life policies, because if the terms were, if these things were not redeemed again and death occur, it becomes an issue. So this kind of this whole life policy is not usually used. It's not common to be used that as for collateral or to be used for loan, or to be taken as loan in the life of it. It's not a practice that is encouraged in Nigeria because of the abuse. So that's the issue. It's not encouraged. Have I been able to answer your question, sir?
Okay, noted, madam. Then secondly, my second question is this. I believe that in one of your series, you try to educate us that insurance should not be seen within the context of an investment. I hope I'm correct. And if that is the case, based on your subject matter this evening, talking about the different classes of life insurance, don't you think that it will be a great service for those persons who have this investment mindset, for you to have to begin to push this category of the profit whole life policy and the low cost whole life policy to them as a kind of attracting them into the net? That is my question.
Okay, sir. No, you said insurance should not be seen as an investment.
I started by saying that I suppose I'm right in one of your series that you try to educate us that insurance is not an investment, that we shouldn't see it as someone probably who actually put money in the bank expecting a kind of interest.
Okay.
Am I right?
Okay.
And if that is the case, my question is that don't you think this category of life insurance policy, specifically the profit or life policy and the low cost whole life policy should be attractive to persons who have that kind of mindset, to attract them to embrace insurance? That is my question.
Okay, sir. Thank you very much, sir, for that question. Yes, just like I told us that this is a series, there will still be another type of life insurance that investment is linked to it. Just like I told you, yes, life insurance, the basic concept is about the cover. But just like we have talked about it today, the one with profit and that low cost, I said is with profit, is a form of investment, because I said those policies participate in the investment of the life office, or the proceeds of the investment of the life office. It's just that the bonuses are reversionary. What I mean by reversionary is that you don't cash it out. It is being paid as part of death benefits. But just like I told us that this is a series, there will be another kind of policies that you can cash out. That is a form of now a hybrid of whole life with investment that you can have maturity, you can cash out and all that. So just like I told us, it's a series. But I'm laying those foundations and telling us why, most especially this whole life policy, because it was not well delivered, or the insurance public did not understand the concept. That is why it was not attractive to them. And because insurance companies too, because of the innovation, I told us that insurance industry is evolving. It's a work in progress. Over the time, insurance industry too has evolved. That's why the insurance industry too have come up with some more attractive life policies, life insurance policies. There are more attractive life insurance policies. That is not that you just put your money for a whole life and you will not have anything to show for it. These days, you have something to show for it. So just like I told us, it's a series. Join me next week as we continue on this series of why life insurance is a benefit to be assured. I really want to appreciate everyone that has participated in today's program. For those that have asked questions, please, we will have another person who wants to ask questions, because I've received signal that our time is about, this meeting will go off, and I don't like it to go off. I always want to end the meeting. So I really appreciate every one of us. I thank you for joining me. Next week is another time. Please join me between 5:30 and 6 every Wednesday. So let's continue to understand, to have a good concept of insurance. I really appreciate every one of you. And
Okay, madam.
thank you. In case you have someone who wants to do insurance, or you need insurance, please contact me. Or my contact is on the screen. Please contact me, info@graceojob.org, or my info@consultancyservices.com. You can always reach out to me, and I'll be there to attend to you. So all our insurance needs. I really want to appreciate every one of us. Thank you, and have a wonderful evening.
Thank you so much.
Thank you,
Well
madam.
done.
You did not ask questions. Oh,
Yeah, next week is another day.
Dr. Ogunwale. Ogunwale, I really appreciate you, sir, for joining me on this meeting. Mr. Tope Durojola, Madam Ofon, Silverbird School, Silverland School. I want to appreciate all of you. When I remove my screen, I can see everyone. Thank you, everyone, for joining.
You are welcome, ma'am.
Thank you,
You are
sir.
welcome.
I really
You're
appreciate
welcome,
that.
madam.
Do have a wonderful evening.
And you too.
Thank you, sir. Next week is another time. I like it, Dr. Ogunwale. These are my seniors in the industry. Thank you,
You are doing
sir.
very well.
Thank you, sir, for joining me, sir. I didn't see you on time. I would have called you to contribute, sir.
Sorry, I'm joining late. I just saw the notice on my phone now, and I decided to join. I didn't even know. I don't even know what the time bound.
It's between 5:30 and 6, sir. Thank you so
5:30
much.
and 6. Okay, it's already 6 o'clock.
Yes, that's why I'm rounding up because my time is up. So next week is another time. If you join next week, I will call you, sir, to contribute to the discussion.
No problem.
Thank you, sir. I want to appreciate everyone. Do have a great evening.